In terms of your expectations for JD moving forward, you've got a sum of the parts at around about that $90 mark. Do you think, though, that with the prospect of a slowdown that we have been seeing on the consumption side in China, that it might be a little bit rich moving forward over the next 12?
It's a good question. I guess if we're just looking at JD Retail valuation, I actually still believe investor has not fully appreciated some of the differentiation and advantage that JD is doing. But I think our sum of the part obviously included some of the subsidiary, including I think JD Technology. I think that will be a little bit of we are still using the publicly reported previous valuation. So I think if you ask me anything that I were to change, probably will be that private entity. Which is the subsidiary that we bake into our sum of the part. Otherwise, I think on JD Retail itself, yes, broader economies are slowing down, but this is true for everyone. And if you look at JD able to pull in the June 18 promotional sales, which is 10%, and then the total quarter, obviously, this is seriously impacted in April and May, right, with the logistic disruption and the Shanghai lockdown. But overall, if you think about compared to relatively, I think they still outperform the industry and outperform the peers, especially on profit. They've always been reinvesting over the past few years. So the margin improvement is very, very thin over the past few years. But this time, they're seriously doing a lot of cost optimization, similar to other internet peers. You can see it's really released down to the bottom line, especially you saw the quarter this yesterday.